Welcome back to my channel. Investing should always be personal and wrapped around the goals that an individual investor has. In my case, one of the goals that I have is to retire comfortably and be able to get my portfolio to pay all my living expenses with dividend income. And I never have to touch the principal, meaning I never have to sell one share of stock. I could just live off the dividends and interest on bonds. That would be a great thing to accomplish for my family and one of the goals that I've set off to accomplish. The magic number that I feel is going to provide my wife and I enough money to live comfortably is $120,000 per year. That amount, I think, is a good budget for us to live off of, not lavishly, just comfortably, and have a budget to travel as well, because I want to have fun in retirement. I wanted to share with you how I'm performing against that goal, how far or how close I am from that goal, and share with you some of the stocks that I own. Also share the stocks that I continue to buy more shares in, that I want to continue to accumulate shares with. They're going to help me get to that goal. Now, as it is the case with any of my stocks videos, I am never recommending any stock that I cover for you to buy it or sell it. I'm not giving out any financial advice. I'm just sharing my individual experience, my journey as I invest in stocks and bonds. Now let's go over the performance of my dividend portfolio and how close I am to my goal. So my goal in retirement is to have $120,000, which is $10,000 a month in dividend income. And that would be both dividends paid by stocks as well as bonds. Bonds are really increasing the amount of interest they pay. So that would also include corporate bonds primarily and some government issued bonds as well. Right now, the way I sit is if I look at the last 12 months, I've generated $62,685 in dividends and interest payments off of bonds. And that's a good rate, but it's only 52% of my goal. I have to increase, two things, the number of shares I own in income stocks and really manage that yield. What is going to help is that bonds are paying higher yields. The Federal Reserve, spoke this week. We're going to have interest rates that are going to be higher for longer. That helps the bond investor because in some corporate bonds, you can earn 7, 8, 9%. And bonds are fairly stable compared to a stock. A stock could be quite volatile, it can go up and down in price, but a bond tends to be pretty defined. You know what you're going to get at the end of the term. So bonds, I think, are going to be an important factor in me getting to this goal that I have for my portfolio. In addition to tracking the last 12 months, I also track the last 3 months just to see, am I having a down, 3 months or quarter? I also track year to date. Looking at the year to date figure, we're approximately 4 months into the year. If I multiply that number times 3, I'm going to get a little under that $62,000. Now, a lot of dividends and interest are back end loaded. They're paid in December, and that might be in these numbers that is not showing up. So at this point, I know I need to keep growing this portfolio. I've got a pretty good growth trend that I need to get on in order to get to my goal of $120,000 of income from my portfolio for retirement. Here's a list of stocks that I own that pay dividends, and I sorted it from the highest dividend payers down to the lowest percentage dividend payers. And number one on the list is MPW. And this is a high risk company. It's a real estate investment trust. It's had financial trouble, but we'll know on May 9th how well they're doing over the last 3 months. And I think they're at a point where I'm hoping that they could show that they've repaired their business. The stock's really been down from their high. And right now they pay a 12.3% dividend. If you look at the current stock price, a lot of things can change with MPW. They can change their dividend rate. And most definitely the stock price can, go down further, but it could also rally. I'm really keeping an eye on MPW, and I continue to accumulate shares in that dividend paying stock. REITs tend to pay a high dividend. So that I think REITs will be a part of my recipe going forward. The next company is Himax. And Himax a couple of years ago was a real big winner. It was worth a lot more than it's worth today. It's down, about, I would say 50, 60% overall. And my investment is actually losing money at this point. I'm losing about 29%. But the lowering of the stock price has really created a high dividend rate. And these guys do generate good free cash flows. Semiconductor companies tend to do that. And semiconductor companies are cyclical. So when the economy turns for this industry, I expect the stock price to go up. I'm not accumulating any more shares of Himax. I think it's an opportunity for somebody else. I think I want to stay put with an investment of $31,000 and wait for the stock to really start performing better. The next company is Ternium, and I really like this company. They pay a high dividend of 8.19%. And I've got a little bit of a gain on this metals and mining company. They produce rolled steel down in Mexico, and they have a strategic location because a lot of their product ends up in the United States. So overall, this is a good stock. I was accumulating a little more, but my overall value of this position is $45,808. That's getting a little high. So I'm just going to stay put with that stock, but it's a stock that I really like. The next stock is 3M, and I'm so glad to see 3M is really recovering. This is a great company, and right now they're paying a 6.18% dividend if you look at their stock price. I have a nice gain on the stock. I haven't been holding the stock for a long time, less than a year. And I caught it at the right time, bought it really discounted, and I accumulated some shares. I'm holding off because it's had such a good couple of weeks. I think the stock price is a little overheated. Might settle down and come down a bit, and then I'll accumulate some more shares in 3M. Another company that's really turned things around is Pfizer. Pfizer pays a 6% dividend, and Pfizer is, again, another comeback story. This is a great company, and I think they had difficulty comparing their revenue compared to the years when they were producing COVID vaccines, which made their revenue just explode. What's really hard to compare your normal revenue to a couple of years where you had to step in and sell $80 billion of COVID vaccines. I think those years are behind them. They don't have to compare against the COVID years anymore. The stock really did well this past week. Really glad that I own Pfizer. And this is one where I'm just waiting to let things settle down, and I may be buying more shares of Pfizer. Big Five is a stock that I've really lost a lot of money on. It's a company that I really like because I've known them really pretty much since I was a teenager and really like the company. But my investments really lost a lot of money on them. But they do produce a nice income stream. They're profitable. They generate a lot of free cash. So I'm just going to hang in there with Big Five. PANL is a really nice little company. They do ocean freight, and they do really well. I've got a nice gain on that stock, and they pay a nice high dividend. Ford is really beginning to work. They pay a high dividend. I think they've rallied over the last couple of weeks. Really glad that I have them in my income portfolio. A stock that had a really rough week is CVS. The stock price has really gone down, but they do pay a nice dividend of 4.76 now. And I think the dividend rate went from mid 3% to now 4.76% because the stock price has really gone down. I think CVS is a really good company. They're going to be around for the next 20 years. So I'm going to hold CVS and at the right time begin to buy more shares in this particular healthcare company. USB, they were doing quite well toward the end of 23 and at the beginning of 24. For some reason, there's been a pretty strong pullback. I think these higher interest rates have spooked investors, and they're concerned that banks aren't going to be able to make money in this new era of interest rates. We'll see how those things work out. In the meantime, this pays a nice dividend of 4.64%. CTRE is a really nice real estate investment trust. I've made a good return on appreciation of this stock and a really nice dividend of 4.49. Prudential has been a nice winner. These guys are in life insurance as well as other financial products. Nice dividend of 4.45. Probably my biggest holding in the income portfolio is Chevron. And it's both a hedge in case oil prices go up. I'll be glad that I own Chevron. It also produces a nice high dividend of 4%. And it's the highest individual stock income performer, producing almost $5,000 in dividends per year for me. AbbVie is a really nice dividend payer at 3.79. Glad I've got that. HP is kind of just hidden there. HP just kind of hangs in there, and it pays a nice dividend of 3.75. Kimberly Clark is a very well-known consumer staple, and they pay a 3.59% dividend. And then the last one I'll cover is CitiGroup. I think financials are going to do well this year. They did well at the end of 2023, and CitiGroup is a really nice stock for me. It pays a 3.45% dividend, and it's been a nice gainer for me. So that's just a quick tour of my dividend stocks. The intent is to keep accumulating the right companies. Now, I'm not hung up on, buying dividends just to hit a goal by buying, bad companies. I always want to buy quality companies that I believe in that happen to pay a dividend. And that's the case with all these companies. I analyze them at least twice a quarter, and I have a video on every single company I just went over on my channel. if you want additional details on how I analyze them and what I think the company is worth and what I plan to do with them. So that's my video on dividends. Again, every portfolio should be designed and personalized to that investor based on what the investor wants out of the investments. A nice retirement. Are you saving up for college for your kids? Are you saving up to buy, your first home? Do you just want to hit a financial goal that you have out there? All those things, really, that's the outcome that should be the focal point, because that'll really inspire the investor to really put in the rigor of learning, analyzing, studying companies, looking at other investors for ideas, and maybe learn from other investors, and really stay on that path. When I look at investors like Warren Buffett, and I know he's in the news this weekend because Berkshire Hathaway is having their annual meeting. He's a great example. He definitely loves what he does. He's not doing it for the money anymore. The guy has so much money, and he's already in his 90s, but he's a really fortunate guy. He lived a rather healthy life into his 90s. He had great success in investing, but he'd be the first one to tell you that, investing is about learning. Investing is about learning, adapting, adjusting, and really having sound principles that are quite simple. He doesn't have complex formulas. He actually has a very simple approach. He just follows it year after year, decade after decade. And he's a great example of the success that one can have. The last note I'll mention on Warren Buffett is most of his wealth was accumulated after he turned 65. So the big gains he's had in his career, they've come in the last 10, 15 years, which is also inspiring. I think investing can be done, physically for the rest of a person's life. I could do it for the rest of my life. Hopefully I'm fortunate and live a long life like Warren Buffett. But it's also good to know that, hey, investing could be interesting and fun for the rest of an individual investor's life, and it could be really rewarding at the same time. So that's my video on dividend investing. Thanks so much for watching. I really appreciate it.